We are optimistic in the short term. We believe that both sides find it in their interest to try to achieve something in the negotiations and to look responsible on the global stage rather than being blamed for dragging the world's economy into a recession. So in the next several weeks, perhaps months, there ought to be some progress. But in the medium to long run, we are negative. We think that those negotiations will ultimately fail. But as that happens, policymakers in China will be cutting rates, will be boosting fiscal stimulus, will be increasing credit stimulus. And all of that is going to start happening pretty soon, with the first rate cut likely in the beginning of August, right after the Fed moves, which is why in the near term, it makes sense to be constructive both on the equities and the bond market.
Okay, so essentially describing that, you think you're optimistic in the short term, you're negative on the trade talks over the longer term, but you think the result of what's happening right now is going to basically mean that the government and the PBOC are going to push forward growth in the economy by using various measures. What do those measures look like? You talked about interest rates, you talked about fiscal stimulus. Can you be a little bit more specific in terms of what you're expecting and how you trade those expectations?
The most important move for the market will be rate cuts. They haven't done it for several years. They have done other things like easing fiscally already, but everybody is waiting for easier monetary conditions. And we believe that as soon as the Fed lowers rates, the PBOC will say, okay, the US is going with it, our currency will not suffer if we move as well, especially if China moves by a lower magnitude. So we expect that for every 25 basis points that Chair Powell lowers US rates, the PBOC will decline their rates by between 10 and 20 basis points, so somewhat less. And that is the missing component for a further rally in the Chinese bond market, especially the sovereign and policy financial bond markets. Those are the two where foreign investors are particularly interested in, where we are seeing a lot of inflows because of index inclusion. And we believe that current levels offer a fantastic entry point, especially for foreign players, into the China government bond and policy financial bond markets.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.